I'm going to give you a strategy on how I spot a change in order flow, which signifies a reversal in the market. And you can use this strategy to help you profit if you're a day trader in futures. This is a strategy I use. I absolutely love this strategy. I have really two main strategies that I use. One is the initial balance high and low. I have a video on that. Be sure to go watch that video. I'll link it somewhere in the video. And then I also use a displacement strategy that helps me spot changes in the order flow that tell me, hey, the market doesn't agree that price needs to be at this level, so we're going to send it either higher or lower. And we're going to go over that in this video, guys. First thing is first, though, if you want to tune into a live stream, I am live every single day, Monday through Friday, 8:30 a.m. Central Time. All you got to do is hit that subscribe button. You can tune into all of my live streams where I trade live in front of all of you guys. And I am transparent. I will show you my wins. I show you my losses. I show you my full tilt moments. I show you my angry moments. We all have them as traders. Even the most experienced traders have full tilt angry moments. It's okay. It's entirely normal, right? And I show you all of that in my live streams. I don't hide anything from you. I am transparent, right? And guys, also the things that I put on in this channel, you're getting it for absolutely free. Things that the gurus put in their paid courses that you have to pay hundreds of dollars or thousands of dollars for, I put here on this channel for absolutely free. And all you got to do is subscribe to the channel and you can have that. Guys, let's get to the video. I'm going to go over a strategy on how I spot order flow changes that represent a change in direction for the market, aka reversal. So I'm going to jump in. I'm going to share my screen here. You can see my chart. One thing I am looking for is when a market is moving a specific direction and I want to try to find a reversal off a key area, I want to see price start trying to displace out of that area and show really good strength in the opposite direction. An example of that would be a really good one, actually, would be right here, right? Actually, perfect example on the chart. Right, you can see that in this general area, we have a support range, right? Kind of chop. And this is before market open on this day. And we're just kind of chopping a little bit of a slow grind higher, but we have this general area here that's just a support range, right? Well, the market went up and then we started coming back down. We have this large, well, kind of large. We had this trend down, right? And so as we came into this area, we saw that price really struggled, right? We really struggled to break below this little support zone here. But look what happens right now. I'm looking on a 15-minute chart. This is a 15-minute time frame, by the way. You can look for these things on a 5-minute, 10-minute, 15-minute, whatever it is that you want to look at, right? But I really like the 15-minute. It gives a good, clear picture, aside from the 30-minute. But look what happens. We're unable to break lower, right? And then you see we get this strong displacement candle up where we move higher and then we pull back to continue the trend in the upward direction, right? And so when we see this type of momentum, this type of strength displace out of a support area where we're unable to make a new low, we can anticipate that the market is trying to go higher in this case, right? In this particular case, we can anticipate the market trying to go higher. And so what generally you'll see happen is this is an ICT concept. I don't really trade ICT. This is the only concept that I really take from that playbook, right? Is a fair value gap. When you have a large displacement out of the zone like this, typically you'll get a fair value gap. And sometimes what will happen, and it's known as an imbalance, and what will happen is price will come back and retrade that particular area, right? And so that's exactly what happened here. We displaced, we had a fair value gap right here, okay? This is our fair value gap. Price came up and came down to retrade the fair value gap before continuing its move higher. And so I will look for things like this in particular, where we get a displacement and then a pullback to then long in this particular case, right? Now you can take this and apply it to, a short, right? It's just the complete opposite. Let's go look for another example here. So going forward, this is another example, long, right? You see we're having this movement down. This is a market open to on this particular day. We're having this movement down and then bang, look what happens. Strong movement up. We get a little bit of a pullback. Now in this particular case, there is no fair value gap for us to retrade. We're just getting a strong candle up to signify strength. And it's okay. And let me also emphasize this. It's okay to buy into strength and it's okay to sell into weakness. If you aren't getting the best of entry, but you're seeing the strength in the market, it's okay to take it. If your entry isn't the best, you can size down, right? You don't have to use a whole mini contract to get into a trade like this. You can size down to micros to be able to tolerate more of a pullback in case you're wrong in the near term, but right in the longer term, right? And so in this particular case, that's what you could honestly have looked for. But here, we did get a deep enough pullback where we retraced 50% of this candle that we displaced off of this low. And obviously, like you can see, like the wicks here, there was just really good strength. And so when you get displacement like this, that is the complete opposite of what the trend is signifying, you can anticipate that the market is trying to go higher in this particular example, right? And so you can try to find a good pullback that you can long off of. Again, if it feels a little more aggressive for your taste, you could size down and use micros, right? And so in this particular case, you can long one of these pullbacks and take it up higher. Moving forward. Actually, let's go back. Let's go back further. Okay, here's another really good example. So you can tell that we've had a trend down and we have this general area right here, right? That is signifying a little bit of a support range. Okay, so let's just draw this area. Okay, look at what price does. All right, we have this support zone. Okay, but look what price does. Price tries to go lower and cannot. It barely even breaks this, maybe by a couple ticks. It breaks the support zone. But then look what happens. We displace and go right back up, right? Also, look what happens. We create a fair value gap, right? We have a fair value gap right here. Look what happens. Before we continue the trend higher, we move higher, consolidate. Look what happens. We come down and wick down into this fair value gap to then continue the trend higher, right? And so something you can look for, and now this doesn't have to be based off lows and highs, right? You could also take this information and use it for consolidation ranges, right? So let's take our rectangle tool and let's take this consolidation range, right? We see that we're consolidating here. We're just chop. What you want to look for is a displacement out of that chop zone. And look what happens. You get a displacement. We move higher. Things are looking really good, really strong. Try to get a little bit of a pullback to long off this. Now, you don't want to be too greedy and too picky off this. You could wait and anticipate a long off a retest here, right? But this retest does not always happen. So I tend to front run a little bit. I don't recommend it, but I will tend to front run. And by front running, I will size down because I'm taking more of an aggressive entry. But when you get displacement out like this, out of a chop zone, you can anticipate price moving in that particular direction, right? And so you can wait for a pullback and take a long and go forward. So, but anyways, like looking for these displacement candles is how I identify a change in order flow, because it is signifying that buyers, or in the opposite case, sellers, are present in the market and wanting to move the market in a general direction, right? And so let's move to here, right? Let's move to here. We have a low, we have a support zone, and we displace out of it, okay? And we create what's called a fair value gap right here, right? So this is on short term. When we displace off this low, we say, okay, there is weakness in the market. Look what happens. Fair value gap, price comes up to retest and retrade this fair value gap here. You can take a short, bang, go straight down with it, right? So same thing for the opposite on the short side, okay? But really looking for these displacement candles can make a huge difference in your trading. Does it create harder entries and more aggressive entries? Yes, it does. However, it's okay for you to size down and be able to tolerate more if you're wrong in the immediate term, because you might be right in direction, okay? Especially if you're going off a displacement candle like that. You could be right in the direction, just wrong in the immediate term, right? And so size down, and then when you get confirmation that your trade is correct, then you can start adding on to that position and trying to capitalize off a winning trade. And so, guys, order flow, identifying these changes of order flow and being able to identify reversals like this is massive, 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 guys. This is things that will help, honestly, you become profitable, because at the end of the day, if you're just looking at candles and trying to take a guess at what the market's doing, you're not ever going to be profitable. You're not. And so when you can identify things like this, little hints in the market that the market gives you, that is a good way for you to become profitable and honestly have one good strategy that you just stick with for your trading career. You know, I mean, obviously market conditions change. Sometimes strategies need to be tweaked a little bit based off market conditions, but you don't need 1,000 strategies. You need like one or two, right? Find one or two strategies like this. For me, in my case, it's a change in order flow for reversals like this, or it's the initial balance high and low. And again, I have another video on the initial balance breakouts or failed auctions on the initial balance, so go watch that, right? But This is how I identify changes in the market that help me basically create a bias on where I think the market's going to go. Right. So anyways, guys, if you like this kind of content, smash the like button. It's totally free way to support the channel. Again, this is information that people put in their paid courses, right? There's only a select few traders out there that put things out like this for free. And I'm going to be one of them. I'm choosing to be one to where I do not want to create a course and sell you guys on absolutely anything. I don't want to sell you anything. I used to have a course. I don't want to be that guy anymore because everybody's doing it. I don't want to be like everybody else. So I want to give you guys information totally for free. So if you like this kind of content, smash that like button, subscribe. And guys, I am live. Just as a reminder, I am live every single day, Monday through Friday, trading the NASDAQ for you guys right here on YouTube. So if you want to see that, subscribe, and I will see you in the next video. Cheers.